что еле макар прыгал. Есть не спрашивай, что я стуста. Есть не искала, что зазнадать. Есть не искала, что мак.
What's up, YouTube? CEO the Pharaoh here, back with another video. And honestly, this video right here is going to be another episode of Market Structure Talk. So this episode, I do want to go over candlestick analysis. Basically, reading candlesticks. What type of candlesticks are you going to see before they usually make reversals in the market or make the moves that you are looking for them to make? So I just want to go over like how the market moves or how the candle starts to look once they get to certain areas and try to remember them in a way. So as you guys can see here, we are starting off with Nas. And first, for the follow-up, if you guys watched my last video, it went exactly according to plan. And also I spoke on we spoke on how it's going to react once I had started here, broke structure. So I was looking to see it come back up and retest this trend and then drop back down. And that's exactly what it did as well. So it's crazy that it did exactly what I thought it was going to do twice. So let's continue to scalp this market. And honestly, I feel like this is a very strong area of support. Now, I do not feel like it's going to get below this. I'm gonna be honest. I do not feel like it's going to get below this level right here. Let me make sure I mark that up correctly. Yes. I see buyers took control at that point. So, yeah, I don't feel like it's going to get below this level. And it hasn't been this low since, July 19th. So, it haven't come back down this low and all the way since July 19th. So, this is reaching a very, very, very low level right now. Crazy to see. So yeah, I definitely feel a very strong buy here, and this could be a long-term buy. We're going to see what the news is looking like and see if we have the right confirmations for that, and we could probably hold this for a while and swing this trade all the way until next week, more than likely. So we're going to look into that, but let's go ahead and get into our candlestick analysis. So right here, as you guys probably can't see, I have notes of all the candlesticks, every candlestick pattern that you could think of. I just got a couple pages, so we're going to go over, we're going to point out what we see, and we're going to make note of the important candlestick patterns and how to point out if we have a winning trade or not. So where I do want to start at, we're going to take a look at all of these swing lows and swing highs. So we're going to start at the 4-hour time frame and work our way down from there. So first, we're going to start here. I feel like this one is a good place to start. So right here, we're on the 4-hour time frame, and we see here that, okay, this is an area of demand. It's in the area, so it has re-entered an area of demand, and also we're starting to see weaker candles now. So we got this long bearish candle, and then we got this candlestick right here. Once it entered our area of demand on the next 4 hours, it bought up. Then it sold down and sold down some more until it got to the bottom end of our demand area, which is a level of support as well from what I see right here. So I marked up a level of support right here before, and it has come back down to that level again. So this right here is a whole zone. You could call this a support zone right here, or in other words, demand. So we see that it has reached the bottom end of our demand. It reached that support zone where buyers are heavy in the market, where there's liquidity, and we see a Doji, it looks like, right here at the bottom before it started to take off and then do what it does. So that is on a 4-hour time frame, but let's go deeper. Let's go into the 30 minutes. Let's go into the 30 minutes and see what happened. I'm gonna have to zoom out a bit. All right, here we go. So we pointed out that we came across a doji before the market shot up. That was the final candlestick that we got before the market went all the way off. So let's look deeper into it. So just as I pointed before, once the market entered the demand zone, we started to see some resistance, right? We started to see smaller candlesticks, more consolidation, and then it dropped off a little bit more until it got into this bottom support area, which what I see from this is that if it doesn't close below that support area, then it's a very strong chance that this market is still going to buy up. Also, what I see right here is divergence. I spoke to you guys about this last video, and we're seeing it again on a smaller time frame. So we see a level of divergence where we have a lower high on our chart, but a higher high on our RSI stochastic, which is showing us that this market is getting ready to buy up. So we see that, and it's in our demand zone. Now let's look at the candlesticks. So we got very strong bearish. Then we got this bullish candle coming up to about halfway of this long candlestick right here. Then we ended up getting a doji. So the next candlestick that comes out after a doji tells you who won that battle between the buyers and the sellers. So as we can see, the buyers won that battle. And also, this is a, let me get the name right. So this is a butterfly doji right here, which means you see this long wick right here. But what this tells me is that the buyers pushed this market all the way back up. Yeah, although it did come all the way down here, by the end of that candlestick, the buyers ended up pushing this candle all the way back up, causing it to close above where it opened at. And then the next candlestick confirmed that buyers was in control as well. So we got 3 bullish candles, or 4 bullish candles in a row now, which is telling us, okay, this market is getting ready to buy, plus the divergence, and it's in the demand zone. So those are great confirmations. Those are the great candlesticks to see. So what I'm seeing from this is once you see I'm trying to confirm here because I don't want to say the wrong thing. Well, not say the wrong thing, but I want to make sure that what I'm saying is correct. So it looks like it is. We got 3 bullish candlesticks, and to see a bullish engulfing candle coming all the way up past these candlesticks right here and even meeting halfway to this candlestick shows me that this market is getting ready to buy up. And also, as you guys can see, we now have created a higher low. So we have now created a higher low, which is also a confirmation that this market is getting ready to buy up. Boom, boom, and then it took off. So that's great. That's great to see. All right. So I'm just trying to get an eye for what type of candlesticks usually will show up. And this is the first example. So let's continue to look further into it. But that's a great example right there. So higher lows, it's in a strong demand area. Also, a bullish engulfing candle after seeing a doji. And I also want to point out that you guys, a lot of people probably would have entered as soon as they saw this candlestick right here. And yes, although you would have been profitable, what do we see right here? We about to see the same pattern, right? So we see a bullish candle, then we get a doji. A bullish candle, then we get a doji. But that third candlestick, look at that one. You see the difference between this candlestick and this candlestick? That's what makes the whole difference in taking that trade right there. That makes the whole difference in whether or not you should enter that trade. Because this didn't show me that the market was getting ready to buy yet. This is not showing me that the market is ready to buy. This is showing me that the market is ready to buy. And I really like that, because you about to see the same type of pattern or candlesticks. But that big difference is that third candle. Now, where would I enter on this trade? It's easy to say by just looking at it, but I'm gonna be honest, I probably would have entered on this candlestick right here. I would have entered on this candlestick, and I would have just had to go through that little pullback. I would have just had to go through that little pullback. That would have been short from 89 to 45. I would have been short by $44. I just would have been, which is not much, honestly. I would have had to been out of profit $44, and then it would have took off. It would have took off. But it's really up to you if you can really withhold that drawdown. And also, if you're mentally strong enough to not be afraid of that pullback and never fold. So also I did want to go over these as well. So we see that it entered the demand zone right here as well, right? This is when it first entered the demand zone. And we see this doji, and then boom, boom. We see these next 2 bullish candlesticks. But again, the difference. So you guys probably wondering like, okay, why wouldn't I have entered right here when I see this, that it's respecting my demand area? This candlestick makes the whole difference. Again, this is a bullish engulfing candlestick. So that shows me that, okay, the buyers really are in control. Whereas this small candlestick, and this is on a 30-minute time frame, and it only moved, let's see, 60, 50, it only moved 2 points. In that whole 30 minutes, it only moved 2 points. So that's not enough for me to have confirmation that this market is ready to buy up. That is not enough. until I get a lot of movement. Then that's when I would have entered that trade. Like I said, I would have entered right here and I would have just had to go through that pullback. I probably would have maximized profits, because look, where did the market come down to? It came down to this small support right here. Let's put it right here at the end of this wick. And look at that. Look at that. And then it took off. And then you could about say this is a W. So we got boom. Then it pulled up, boom. Creating a lower low. And then took off. So let me move this one. So right here, we got boom, 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 boom. So that's also a pattern that's that you guys could have hopped in on and pointed out for a confirmation to get in on this trade. So that's a nice setup right there. And as you guys can see, once it got out of the demand zone, where did it touch back down to? Right there to the top of it. Never did enter back into the zone. It just touched the top of it and then took off. It just kept pulling back to the top of it. But look, we enter right here on this candlestick, 789. It went all the way up to 990. That's $200 right there. Easy 200. That's if you're just hopping in for one. If you hop in, if you take multiple entries, or say you even maximize profits right here, man, you're making bank. You are making bank. And that trade never did come back out of profit again. So that's a nice pattern for a buy. Let's look into another big reversal point. What type of candlesticks will we see then? So we just went over these. I'll go over this. Yeah, I'll go over this. So next area I want to go over is this area. All right, let's zoom in. Let's look at what we see. So as we can see right here, beforehand, the market never came up this high. As we can see, the market has not come up to this level and never. So the market has not come up to this level, and it has created a new high from what we can see. So that lets me know, if you guys ever trade NOS or any indices and stuff like that, or anything, honestly, especially I learned this really with Bitcoin. Once it creates a new high that it haven't reached ever, or haven't reached in a while, it's usually going to drop soon afterwards. So all of that bullish movement that it just caused is going to come back and fill that area back in, whether it's going to meet in the middle of that area and then continue back on this uptrend, or whatever it may be. But it's going to soon sell off and fill in all of that bullish momentum and cause a correction in the market. So that's really what it is. It's just causing a correction. So what we see here, that's exactly what we see here. And usually when it does come down or sell off, I showed you guys this before, but it's going to come back down to either a previous support level or previous demand area, or a previous resistance that is now going to become a support. Those are your three options of where the market is going to come down to if it has a major sell-off. And that's pretty much what we see here. Came back down to a previous support level that the market had created a while ago. So this was created on July 13th, and then it came back to that support level on July 27th. So that's also where we got our demand area from. So what we see here before the market sold off, we see a lot of consolidation. So it consolidated for 4, 8, 12, 16, 20, 24, 28. Shoot, nearly 3 days. It consolidated for nearly 3 days and then ended up selling off as we see here. So we see consolidation, very little movement, and it refused to break above this high where this wick went all the way up to, is what I'm analyzing right now. So it did not ever break above this, and kind of created a new high, but it wasn't nothing crazy. So let's go into smaller time frame and see what is really going on here, because you can't really tell from that 4-hour time frame. We see consolidation. That's good, but I want to see, where did it decide to sell off? And it's loading up the charts right now. Give it a moment. All right. So just in case you guys was wondering, yes, this is a supply area. This is a supply zone as well. I marked it up over here, but this is also a supply zone. Why is this a supply zone? Because this is where you see major bearish momentum, where the market sold off a lot. This is where sellers are in the market. You guys see this? Basically where my red resistance line is. This is where sellers are in the market. How do I know this? Because what did the market do right here? It reached this level, it sold off. Now my confirmation for this was when it came back up to that level again. And what did it do? It sold off some more. From here, 149 to 0.77. That's a big sell-off. That's some money right there. So again, third retouch. This is your major confirmation right here that this is a supply area or a supply zone. So now let's read it. And what I'm seeing before now is very small movements. You guys can go from just these movements right here and can see that the market is ready to sell off. You could tell that the buyers are losing control. They're losing momentum. All that buying power is starting to wear off. And some of you guys may look at this and be like, okay, why didn't it do it right here? We're seeing small movements right here as well. But these candlesticks right here make a difference as well. These bullish candlesticks that we're seeing, these two right here, and then we got a little bit over here. But if you guys haven't noticed, this is why I keep my EMA. This is why I keep my EMA on. Because look, not once did it cross below my EMA. But over here, it did. It finally broke below my EMA, showing me, again, buyers are losing momentum. And like I said before, once it reaches a new high, it's going to sell off and cause a correction in the market. So, for the first time, we get a, let me get rid of this. For the first time, we get a very bearish candle. Now, I want you guys to pay attention to where this candle opened and closed at. This whole time, the market has been consolidating, right? Let me get rid of it. The market has been consolidating, and it has, this is the swing low. This is the lowest that it has come. Where did this candle open and close? It opened all the way up here and closed right here where the market has been selling. I mean, where the market basically been consolidating it, and where it refused to go below that point. And usually, once you see a candlestick like that, you know, it's not just gonna sell off and then buy back up. No, it's gonna continue going in that momentum. We got a very bearish candle breaking below my EMA, and it's been consolidating for a while. Let's see what else we got. So we don't have any we don't have really like any divergence or anything like that going on. So we can't go off of that. All we can really go off of is the candlesticks showing us that the market is getting ready to sell. And like I pointed out before, to be honest with you, probably would have entered this trade. So right here, we got it breaking below the EMA, but that next candlestick, it bought up and went back above it. So I wouldn't have entered right there. Let's see right here. We got this, and then it went above it, but it didn't break below. And then we got this candlestick also selling off. So truth be told, I probably would have entered on this candlestick and would have had to go through a little bit of drawdown. But from what I see right here, this is about the same amount of pips as the last trade that we would have entered early on. So a little pattern that I'm seeing. Well, I'm gonna see on the net setup. We're gonna clarify that on the net setup. I'll make sure if that's a fact or not. But around 44 pips on the drawdown, or a little bit more than 44. But we got it breaking below, and then in the next candlestick, we got another major sell-off. So that would have been your confirmation to hop in on this trade right here. And it's usually if you get two large candlesticks back to back going in the same direction, that's really your confirmation that the market is getting ready to reverse. I'm gonna be honest. From what I've seen previously, that's really pretty much what I would go with. Yep, I got it written down in my notes right here. So if a candlestick trend breaks two swings, then the market could continue in that trend. And should have mentioned this before, but with these candlesticks, when you're analyzing your candlesticks, like, use it to only identify the trend and structure. We're only using it to identify the trend and structure of the market, not an actual trade. You don't get an actual trade unless it breaks structure. Once the market breaks structure, or anything like that, then that's when you have an actual trade. What do we see right here? We see a break of structure, right? So this was my support level. As I said, this candle opened and closed right here at the support level. Like I said, it's going to continue selling off. So right here, we got the break of structure. This is the candlestick that causes the break of structure. It broke this support, it continued to sell down, and it closed below it. That's a break of structure telling you that the market is going to continue to sell. Now, let's say you wanted to be patient and you wanted to wait on that break of structure. That's perfectly fine. Look, you're always going to leave money on the table. You're always going to leave money on the table. You have to be fine with that. So, let's say you hop in on this candlestick. You're still catching a lot of pips. You're still catching a lot of pips. If you hop in at the beginning of this candle. And let's say you take advantage and take multiple entries. That's great. So, you're going to benefit from it regardless. You're going to benefit from it regardless. So we got a break of structure right here. We have bearish engulfing candles. And we got the market that created a new high, started consolidating. Never did break above that. Never did break above the swing high, creating a new high point. So that let us know, okay, this market is getting ready to sell off. Right here, what did it do? You may consider this the same thing, but it is not. It consolidated, created a new high. What did it do right here? Same thing, created a new high. What did it do right here? Boom, to here, new high, to here, new high. So it kept creating new highs. That's another reason why you wouldn't have entered right here, even though it's consolidating. We see right here, though, that it never did create a new high. Unless it breaks the previous high, the market is in potential to sell. It has potential to sell. So that's what we see right here. And then, like I said before, what it'll pull down to, another demand area, a past support, or resistance that has now become a support. You guys see that? It's a resistance that has now become a support. All right. Let's look into another area. Now, this one right here, let's look at this. I like this. So, let's go to a smaller time frame. So this is like very volatile movement. Let's see if it's in the time frame that I would take a trade. So yeah, it is. All right. So this right here. No, I don't like that. These are the trades that you don't want to take, not for a sell. Now, it's good to take it for a buy. We have our confirmation for a buy. Look, it entered our demand zone. We see that it's respecting it. Okay, it bought up. You guys probably could have caught the little scalp right here. And then you would have got out where you saw exhaustion. Where we see exhaustion right here. This long wick right here tells us, okay, there's a little resistance right here in this area. So we would have got out of the trade right there. Took that profit, sold down. Still respected it. You could have hopped in again. But I probably wouldn't have hopped in. I would have wanted to see if it was going to come down to this level. Which it did buy up. And then came right back down to that level. Bought up a little bit, just a little bit. And then sold down some more. All the way to the bottom. And what it did right here was it knocked out everybody who was in for a buy right here. It knocked out those buyers, and then what did it do? It decided to buy up. I'm going to tell y'all this. The market is not in your favor. So that's why you don't want to hold trades for a long time, because it's going to come back down and knock you back out. You know, you may feel like you're on top of the world. But right back to it. We see still respecting our demand and continues to buy back up. See what type of candlesticks do we get here. All right. So see right here that it is oversold. Don't really care about that though. It doesn't really matter, honestly. But not seeing very major movements from these candlesticks, but I am seeing that the market is at a level where it's respecting it. It's not like it's continuing to sell down. And also we see that this is a very strong level where buyers are anyway, because we see twice before that the market has pushed up, that the buyers has pushed the market back up. So it created a new low, which could show us that, okay, this market could potentially sell back down to this area, right? If we was in real time, we would think, okay, this market could potentially sell back down to this area. But what tells us that it's not is this candlestick right here. This candlestick right here breaking us above a previous area of resistance. So this was an area of resistance right here, because it was also a support that became resistance. So this was support at first. It broke below that. This is where we were taking trades at first, right? It broke below that. Okay, now it's coming up to that area and then dropping down some more. I wouldn't have hopped in unless I saw a candlestick like this one or multiple candlesticks breaking us back above this point right here where my black line is at. Breaking us back above this point, showing me that the buyers are in control. This is showing me that the buyers have now taking control, and they're ready to drive this market back up. This long candlestick right here is the confirmation that I need. So this is a great candlestick to see. And let's see. So we got a inverted hammer right here, which could be used as an indication that the market is ready to buy back up. But I don't really like these type of candles, because as you can see right here, we about got the same thing. But what did the market continue to do? Sell back down. So this is the confirmation candle that I would have been looking for right here. This is the only confirmation candle that I would have been looking for. You guys see right here, sold up, then dropped down, then it sold back up. But I probably would have entered on this candlestick right here. This is where I would have entered that trade. And then again, we got some drawdown. So to counter that drawdown, this is what you do. Enter with a smaller lot size at first. Enter with a smaller lot size. Let it pull back. And then this, like I said, where did it pull back to? It pulled back down to this level of support. It pulled right back down to the, we marked it up going off of these candles right here. And then where did it pull back down to? We wouldn't have, let's act like this movement didn't happen yet. We see right here, okay, we enter right here. Boom, it pulled back. Okay, where am I seeing resistance at now? Right here. It's wicking out right here. Okay, this is an area where I can enter in for a real trade. Boom, enter in for a real trade. Then the market buys up. So, those are the type of candlesticks that I want to see. And it's really taking control of your emotions, because some people would have seen this candlestick and would have been like, oh crap, I'm finna miss out on this trade. Like, I need to hurry up and hop in. What if the next candlestick would have been a bearish candlestick coming right back down here, and then you entered all the way up here because you didn't want to miss out on this trade. And now you're deep in drawdown and this market continues to sell back down. Like, that's why it's important to be patient. Wait on your candlesticks. You have to wait on your candlesticks. And again, it touched the top of this demand area and continues to buy back up, man. It's almost like magic, don't you think? Because it's crazy how it comes right back down to that area and then buys back up. All right. Let's see. What do we have? All right. So this is what would be a fake out right here. This would definitely be a fake out right here, because it breaks below our EMA. It closes. Okay, you thinking, okay, this market is getting ready to sell back down now. Let's see. You would think that this market would be getting ready to sell back down. And then it pulls back. And then come all the way up here. But let's see. What do we have to let us know that this market was getting ready to sell? Let's look beforehand. All right, so you about got it coming up. I mean, unless you would have took it up here, then this would have been a great indication that this market was going to sell back down, because we have a previous support level that has now become a resistance. So it was support right over here in this zone. It was support right over here and came back up to resistance level. You could have scalped this trade and sold it down for right here. Once you entered it down here, it would have been too late. You would have missed the movement, and then it would have went back up. So I wouldn't enter that trade unless I entered up at top. It's easy to say that after seeing the movement, though. It's easy to say that after seeing the movement. So let's look at what happened beforehand for a little scalp. What we see here. All right. So after this after this bullish momentum going up, we're starting to see that smaller candlestick movement. We're starting to see that buyers are okay. They're kind of pulling out a little bit, right? They're starting to lose power, and then okay, finally got a red candlestick, another bearish candlestick. Then we get a doji. And then what's the candlestick right after that? Boom. Sold down. So probably would have entered at the end of this candlestick and caught these small little pips from right here. So 272 to 201. That's still a good amount of pips to catch, especially on Nas. That's a good amount of pips to catch. So I would have caught that little movement right there and then took advantage of those profits. Let's see what else. Again. Okay. Same thing. We see very bullish momentum. You would have to have went through a lot of consolidation with this one. I don't really like this setup. There's no clear setup on this one, to be honest. It's only a setup afterwards, after the fact. So this is a bad market to trade in. This is a bad market to trade in. It's only a setup after the fact for a sell. Now for a buy, perfect. This is perfect for a buy. You can mark this up at the demand zone right here. Boom. We see this where the buyers take control right here in this area. Okay. It comes back down to the area. Same thing. Bought back up. That would have been a great setup for a buy. Great setup for a buy. Let's see the candlesticks when it comes back down to the area. Again, a doji. So we're starting to see sellers, we're not getting really strong candlesticks for a sale. We get a doji engulfing, another big candlestick buying up, and then we got these wicks pulling back down to this area, but where did it ultimately close at? Up here. So if you wanted to catch this pullback right here, that's great, and you would have caught this movement all the way up here if you would have held it all the way up to here. But I doubt anybody would have held that up to here. They probably would have took profit around this area, honestly. But this is a great setup for a buy. We see a doji, couple engulfing candles, and then it bought up, and then the market came right back down to a perfect area to buy it. That's my indication to get in for this trade. That's my indication. I wouldn't have entered nowhere up here. I would have waited till it came down here, entered in. And then again, guys, this is just my analysis. I'm just analyzing the market. I'm going over candlesticks and seeing how the market reacts once it gets to a certain area. That's all I'm doing. Now, let's see what happens when it comes back down to the area. Let's look at the difference. So, boom. Now, you want to wait. You want to wait. Because look at this. This is different from the other scenarios because what happened here? The market created a new high, and we get a continuation of selling candlesticks. So this is different. This is showing me, okay, sellers are really in control. Because this is different from this right here. You got a little bit back and forth right here. But right here, you got straight momentum of bearish movement. You got straight bearish momentum. So this is telling me, okay, this is a strong selling market right here. Let me see what happens this time once it gets to our area. Let me see. So we get this right here. Then we get a doji and candlesticks after that. We don't get no very large buying candlestick like we usually see, right? We're not getting one of those that's a confirmation telling us, okay, buyers are still in control of this market, right? We're not getting that right here again. So I wouldn't have hopped in. Plus, on the third retouch of any support or demand area, you want to be very careful. I don't usually like to take it after a second retouch. And this is the reason why. We're not getting that same type of movement showing us that the buyers are in control. So we get this right here. Now this right here showing us buyers have now taken back control. And again, this is where I would have entered. This is where I would have entered. Boom. This is the type of candlestick that I want to see that shows me, okay, buyers are now back in control. This is a safe market to buy in. It's still in the demand area. I mean, it's still in a good area to buy because look over here. Look to the past. Look to the past. Actually, I'm just move this one down. Look what happened. Came right back down to this level. Another demand area where buyers took control. So once I saw that it broke past this zone, this is the next area that I would have looked to. This is the next area that I would have looked to because we see, okay, first we were buying off of here, right? Okay, it broke past that. Okay, where's the next possible level that it can go to? Let's look to the past right here. This is the next level that it could possibly go to. So, you read the candlesticks going off of that. You got a buying candlestick showing us the buyers are back in control. Safe to buy. Same thing right here. We already know what's to the left of us because we marked it up. Boom. Buyers took control right here. Got a little bit of pullback. But as long as it didn't break below this, it didn't break below this level. So buyers are still good. I mean, we're still good for a buy. It didn't break structure. It didn't create no new low. So we're still in a good area to where we could have bought. And if you wanted to enter back down here, it's great. Enter back down there. Or like I said, enter with a smaller lot size. Wait for their drawdown. Enter with your real lot size. Boom. Buy up. Maximize profits. Again, never did break below this level. It's not creating a new low. So we're still good for a buy. Or you could have took your profit, waited for it to come back down to that level again, hopped in that trade again, caught a nice amount of pips as well. So that's how I would have read that market right there. That's how I would have read that market by analyzing the candlesticks, and that's how you can as well. So hopefully, I got an alert set up for that one. Hopefully you guys enjoyed this video, man. If you did, please leave a like, comment, subscribe, and also share this video with guys you may think need it or need help analyzing candlesticks. I'm going to do more of this because it's a lot more to it. It's a lot more to it. But like I said, please leave a like, comment, and subscribe. I'm going to see you guys in the next video, man. I'm out.